What's going on, my friends? Chris here. I want to bring you all an update of something I've been doing some research on. And what I want to do is kind of help out people who've been struggling in the crypto space a little bit. Been in the space for 5 years. I've seen a lot of price action, just the ups and downs. And what I want to do here, I'm going to show you from stocks to crypto, a powerful indicator that can help keep you on the right side of the market. So this is for people who are a little less experienced and have been struggling a little bit, and they feel like, they're trying to make these trades and their account's going down. They may just be bucking the trend, and that's something that I want to bring to you today. And what we want to take a look at here, this is going to be the 30 moving average, and the 30 moving average for the most part is going to be a month worth of data. I'm a cryptocurrency guy. I do trade in the stock market, but there's no closes, so it's just continuously all the time open, so that 30-day works really well in the cryptocurrency space. So what I want to point out here, guys, if you're a person who goes long and you only go long, what you want to do is wait till you have the river or the tide with you. And you got to think of it almost like a river, and when you're in this river, you want to go with the flow. You don't want to try to swim upstream. And with this 30 moving average, whenever we're trading up above it on the daily time frame, right here, we're trading up above it and the moving average starts to point to the upside, that's when you potentially have the wind at your back and you can trade bullish. And then once we break down through this 30 moving average, as you can even see here, this is just an example of Netflix. I got a ton of examples I'm going to show you here, guys. But once we broke down through this 30 here, you can see we've dropped, and I know there's a lot behind this, but we've dropped over 70% here. When we were trading up above it, when we had this candle close until that drop, we had about a 17% run here just using this 30 moving average. So if you're going long, you want to at least be up above this 30 moving average. It's just something simple for you. If you're going short, you want to be trading with this below. So once we break below, you would like to wait for a retest of that, most likely, enter your short position, stop over top, and then try to allow it to ride as far as possible. So just to give you some more examples, guys, and this is TLRY right here. This is one that runs really hard, really fast when it does, kind of like cryptocurrency. But you can see when we have an uptrending 30 moving average here, we make amazing gains. I mean, once we broke up above it, we were at about $9. We ended up going to up around $70 or so. And then as we've been in this downtrend here, for the most part, we've had some pretty strong reactions. But for the most part, this has been downtrending. And when we're trending down with this moving average, you don't want to be fighting that and going long. So to give you some more examples here as we just kind of cruise around, and also if you get something from this, don't forget to like, subscribe, hit that notification bell. I'd like to show you another one here, MSOS. So look in the uptrend, guys. So if you're trading here up above and you have an entry and we stay in until we break, there's 90% there. And then look what it saved you on the downside here. So say you did get out there and you just stayed out as this moving average. I mean, you're looking at tons of percentage here, guys. Let's see, about 67%. And you can just see, pretend price action's not even there. Look at this moving average. Uptrend, this is when we want to be buying. We want to stay out of the market when we're in this downtrend, or we want to be shorting these reactions. But I wouldn't recommend that for anybody who's just starting here. We're just talking, for the most part, looking at longs and when you want to stay out of the market, particularly for these types of stocks. So let's take another look here, guys. Let's go to the SPY and step back. And I think this has done a pretty good picture. There's some times when we're dropping below it here. But for the most part, take a look at this moving average. Uptrend. And now what's happened to us, we've started to roll over. We've had a lower high. Now we need to try to find some support here and get this moving back to the upside, but we're in a downtrend. So we have to be careful here, and this is on the SPY if you're trying to go long constantly. We also have a lot going on in the world as well, guys, and you have to factor in everything in your decisions. Okay, so take all the markets and look at all of them, because they're going to be important. There's a lot of correlations that take place. So if we take a look at Bitcoin, here, guys, say we buy above the 30, we sell out. Once we drop, that's a 36% gain there. Next one we'll take a look at right up here, our close. to our drop, that's another 25% gain just playing this moving average. When we close above it, you buy, stop below, and when we close below it, you get out of your position, you go to cash, and you look for another opportunity. And then take a look here to the downside, right here, till we broke up about 30%. So these things can be very valuable. Take a look at this cycle here, guys. For the most part, when we were in this uptrend, we were trading up above this 30. Take a look how it rounded out, and then we got pushed. So if you're trying to go long in here, you're fighting that trend. If you're going long when we're up above it, you're trying to ride with the trend. So that's something, and you're also going to have these times when it's just moving sideways and the moving average is not going to be that valuable to you. So that's when you don't want to be buying up above that, and when it's just going sideways, you want to get that roundedness, whether it be to the upside or the downside, when you really start to roll over there. And you have that nice candle close below it. Look for volume as well. So if we have heavy volume as we're closing below it or closing above it, that's going to help your case as well. But when you're moving sideways, they're not as powerful. But for uptrends and downtrends, and also for support and resistance, these moving averages can be so important for you. And this is just your 30 moving average. So stepping back and taking a look, guys, let's take a look at Amazon. I mean, we can just run through this here, and you can back test yourself. So it starts to round out here. We have a candle close up above it. We're staying in until we close below it. And we had a close below it right there, 57%. Then we had consolidation where this moving average is not that important. Right here, just false signals moving sideways. Still no clear direction. But now what you can see is we've started to roll over a little bit again. That's why it's so important to start to change this trend back to the upside as soon as possible, because you're just going to get more of that tidal wave to the downside the longer that it goes. You have to try to get out of that. Take a look at SQQQ. Guys, for the longest time, this moving average has just been driving us to the downside. See here? And now how it's starting to round out a little bit. Something we definitely have to watch. Okay, starting to round out a little bit. We had our low, high of the bounce, potentially a higher low, and just really look at that moving average. Take a look at Litecoin when we're trading below it and when we're trading above it. And guys, take a look at this here. And then even to the upside. See the difference in the moving average. So just really watching that and paying attention and saying, hey, you know what, I want to get in a Bitcoin trade right now. And you say, I'm going long, and we're taking a look on the 1 day time frame. You'd look at this and you say, well, you know what, this is actually pointing down right now, and we're trading below it. So we have no confirmed daily trend change here. Why do I want to potentially jump in a dangerous area when I could just wait for more confirmation or a trend line break on heavy volume? So you could just be butting your head up against the wall here, guys. You know, we could get this bounce. Say we come up here and we fail, and then you have a whole nother leg down. That's a possibility, something that you have to watch for, because we're trading below this, but it'll help filter out bad trades. And in Bitcoin, guys, anything can happen any day. But you just have to look at these things, kind of put the odds in your favor. And when we're trading below this, it's typically not the best time to be putting on big longs. So just really control your risk. Wanted to point this out for you guys. If you get something from this, don't forget to like, subscribe, hit that notification bell. God bless. Take care.